So, hello, hello, hello. How's everybody doing? Rocking and rolling in a free world. How's sound? All good? Okay, cool. Here we go. So, 12th of March, 2021. No trade calls, no recommendations. They're responsible for their own stuff. We're here for educational purpose only. And, let's do this, guys. As I promised, I'm going to try and do these once a month. So, third time this year. So far, so good. Let's see what's going on and what's happening. So there's no real format. I'm just trying to pay it forward and answer any questions. So you can ask me anything you want about anything you want. No big deal. I'll try and tackle anything. And chart wise, again, we'll keep on doing this. Hopefully around 45 minutes, I'll take any chart questions and I'll go through any charts that I have here on the platform. Anybody can ask me about any trade they're in, trade management, whatever they want. Nothing's off the table. So don't be shy. Nobody can see your questions. I'm the only one who can see them, so ask away. And if no questions, I'm going to shut it down. And right. So okay, let's do this. So what's going on? Euro USD. Well, basically, yeah. I mean, here, remember, in the context of where we are, everything's pretty much trading together, right? Um, Apart from the rotation we're seeing in equities, but equities bid, euro bid, equities sold, a dollar bid. And the thing you really have to keep an eye out for here is that, Forex isn't leading, Forex is just reacting. And really the focus of these past days and, the focus of what we've been discussing really is all on the bonds, right? And you can see the action here on the bonds. As long as the bonds stay heavy today, you've got a risk of something unorderly happening. You've got the risk of something a little bit funky happening, and therefore meaning that stocks could continue to trade heavy, and that's what's bringing that dollar strength in today. You saw basically USD JPY higher, Swissy higher, Euro lower, Cable lower, Aussie lower, Kiwi lower. It's just that's just the move. It's all the same trade. So don't make it harder than it should be. And right here, it's going to be interesting to see what happens now as we go into get through EU close, right? So Euro USD, do you have a specific question on Euro USD? Or, here from a bigger picture perspective, what we discussed also yesterday into the ECB was that the way things are looking, you'd expect the dollar to catch a bid and euro to trade a little bit softer, right? And we used basically the 120 as a bull bear line, right? Bullish above, bearish below, and that was going to be the Momo line, right? Our base case was, and if you remember here, we've been long euro for a long time, right? Whenever it was uber bearish. And our base case was to start to look for shorts here and to look for a move back into that 120. And then because we don't have a crystal ball, is 120 was going to be pivotal. If we could get bids back above the 120, we'd expect this to try and move into extension all the way back into the 125. If not, if we couldn't hold the 120, especially from a day close basis, we would be looking for this to try and come all the way back down into this 117, 115 area. Does that make sense? So here, nothing much has really changed in our outlook on the euro. And, you just have to see what happens around this 120, right? Basically, that's what's going. Is it going to continue some kind of orderly retracement back into that zone, right? Or are we just going to see a lot of chop here for on the bonds, but it's not really going to get any traction? Bonds get bid, everything gets resolved, markets move higher, and therefore euro moves higher from here. What you have to respect intraday is you see how we're holding the 200 DMA. So again, shorter term, the fight is on between the bulls that need to protect that 200 DMA and the bears that shorter term have to protect this 120 mark, which is kind of like flip the switch in the context of this rotation lower. Does that make sense? So here, if you're long off these lows, you want us to close today above the 120. And if we close above the 120, this is good. And you would, base case expectation would be for the market to try and take out these highs again, right? And that will probably be accompanied with equities pressing higher. No fear, everything good. If not, below that 120, there's still risk to the downside. I mean, here, remember, if I remember correctly, last time we had this this free update, I explained how everything, the context, the seasonals, everything was looking perfect to get that 5 to 10% correction in equities, which we got, right? And here, once again, we're at a very key inflection point because next week we're going into a lot of event risk, right? So not only an interesting point on the seasonal calendar, we're going into March OPEX, right? So March expiry, which they're the busiest expiry cycles, March and with December, and March tends to be fairly bullish, right? On top of it, to add a little bit of fuel to the fire, next week we're going to have the FOMC, BOE, and BOJ. So we've seen the recent comments we've had about BOJ's been throwing out on yields, and we'll have to see what happens in terms of the FOMC. But Chris, the issue here is the risk here to the euro long is that the ECB is talking about lower for longer. We have to do more. We're still not out of the tunnel, et cetera, et cetera, et cetera. And because of where stocks are trading, because of how the economy is doing and COVID situation in the US, there's a risk that the Fed, even though they're going to say they're not going to do anything, they'll start talking about, we start to see, light at the end of the tunnel. So that's going to be a little bit, if those two narratives continue to get traction, you've got a risk for euro versus the dollar. But as always, we don't have a crystal ball, so I would always recommend to just focus on the charts and focus on the levels because they've been fairly clear and they're moving fairly nicely. Okay. BL, we've just started. You can ask any question you want here, right? Yeah, on the DAX, what's going on the DAX? We had a long discussion on the DAX in the webinar yesterday, in the daily webinar. But what's your question on the DAX? I mean, all-time highs, all is good, sky's the limit, go, 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 right? Very tricky to do anything here because you've got, as I was saying, if you look to the left, you've got absolutely nothing. We're in uncharted territory. So all-time highs are bullish. So would I be buying it up here? No, absolutely not. Would I be outright selling it here? Absolutely not, right? So it's really, these are the kind of charts I pay very little attention to. You see, if you look to the left-hand side, we're in uncharted territory, right? So by definition, because I like to look at support, resistance, I like to look at how price reacts at specific levels, et cetera, I'm not interested in a chart where I don't have a roadmap, right? So this will likely trade with risk. So, as long as everything is bid and there's no big correction, this is likely going to stay bid. And it doesn't matter what you got to look at the bigger picture, right? So you probably want to look at the YM, as long as you've got rotation, healthy rotation in the US indices and risk is staying bid, there's no big fear, it's probably going to stay bid. If you have some kind of liquidity event, some kind of snowball effect where correlations go to 1, people have to de-risk their portfolios, etc., then like everything else, this is likely going to get hit. But right now, VIX is getting smashed. There's no real fear. Very little to say or do as far as I'm concerned here, right? Hey Anna, how's it going? What do I think about copper? It's been a wild ride on copper, right? Here, it's I mean, it really depends also on what time frame you're looking at on copper. Because of the way I look at things or the way I trade, especially intraday, is it's extremely hard for me to want to get bullish on copper here, even though it's bid. And if you think about it, really the thesis longer term for copper is only bullish, right? Reopening, more EVs, ESG, et cetera, et cetera. It's all bullish for copper, right? So a lot of it depends on what your time frame is. But you see here, you've got a fairly nice technical reaction. You had that gap down here on this big reversal, and you got very nice follow through, right? And that was in line with the move on equities. You had that, we're looking for 5 to 10% correction, and you've got those that 12% correction. So here, bears are going to be saying, well, it's done, it's got to roll. Bulls are going to be saying, no, that the correction is in. Look at this, we're just bear flagging at highs. We're going to rip higher. The problem again is, look at it bigger picture. It's very rare for something to go knife through butter to the upside vertical and take out all these multi-year highs without any kind of a pullback. Does that make sense? So shorter term, I think what you have to be careful is, again, the seasonal implications also of us going into next week with the three central banks and speaking, especially the Fed, and seeing what happens there, right? Into OPEX, it's likely going to be fairly choppy. If you look at also seasonality in copper, March, April is still fairly bullish. You tend to see the negative seasonality in copper tends to be August, September, October, November, December, so the back end of the year. So here we're in a fairly strong period in copper until May. So could this continue to press higher? Sure, 100%. But would I be chasing it here to the upside? Absolutely not. If we get a bigger correction in the markets, that those correlations going to one, a little bit of funky action on the Fed, et cetera, and you see copper get hit, then this is probably long-term a very interesting chart to look at. At that point, what levels would you be looking at? I think, you'd be more than happy if you got something like a 20% correction back into these previous highs. If you look at this chart, these are the big pivotal levels. Ideally, and maybe this might be wishful thinking, you'd get this kind of move, this kind of correction, and there you'd position to get back long, for in terms of a bigger picture view. But right here, unless you're a Momo chaser, for me, it would be very hard to get long at highs or even on a small correction. I mean, unless you're playing with a very, very tight stop, Anna, right? At the end of the day, the question is, where are you wrong, right? So even if you're getting long or any dips with looking at this as your stop, I probably, rather than buy it here, I'd rather buy it lower, or I'd rather buy it on the break higher so I could trade it with a much tighter stop on the breakout, right? Does that answer your question? That's the way I would be looking at it. Yeah, you've got on that dollar, it's and again, it's all the same trade, but you're very interesting inflection points, right? You see here on the DXY, basically, as we said, you've got that euro, that 120 mark. Here, you've got dollar hovering here, and we marked this up. I posted this on Twitter as the pivotal level, right? It's a lot of chop inside the 10-day and the 100-day here, moving average. but really this is a big pivotal zone for either a rip back into 93 or, you know, correction back into the 90s. This is a big level, and you see this action across the board, right? Whether you look at USD JPY, right? There are a lot of interesting seasonals here also going on, but into this 109, right? We traded, we've been very active here also into the end of the fiscal year, etc. on the 109, but look at it on the weekly. You see how it's a very big level, and it's smack into this 200 week, right? Key pivotal level. Euro at the 120, yen at the 109, and USD CHF right at this previous high here, right? See exactly where they're coming in. Another lovely place to have traded around here. So you see everything's kind of stuck and looking for direction, and likely that direction is going to depend, a lot of it is going to depend in general the kind of orderly or unorderly action we get on the bonds. But again, every next week is just so pivotal, right? BOE, FOMC, BOJ, but really FOMC, BOJ, and OPEX dynamics is very interesting. I think, again, next week into the end of the month is going to be extremely interesting. A lot of opportunity across the board. Yeah, you know, even if you look at yeah, and again, look, very technical. Look at I've been posting this on the book. You know, look at Tesla, right? We had that correction down, back, right into this, you know, that was the inclusion date, right into the 50 back of the move down from A to B, and then smack, look at that beautiful reversal. So clearly, if you were short on Tesla, right, covering into this previous level, you know, you laid them out again into here. You know, we'll have to see if we get traction, but across the board, the action has been very technical, very technical. Look at also ES on a shorter term. On a shorter term chart. So here we're on the 1 hour, right? So basically, this is getting bid, right? Ramping higher. We fail here. If you go back, this is the previous all-time high. Very tight, beautiful 1 hour reversal right at those all-time highs. Chance to get short with very tight risk. And look at the dynamic here. We come right back into this level. We bounce. And then, bam, we go through. And that's where you see how we are accelerating once you break back down. We break back down on the rally. This is the 50 back of the move down of yesterday's range. And they're trying to keep pressure on here. So the market's very technical. Choppy, but very technical. Also on the NASDAQ. Sure, gold. GC. Yeah, if you remember gold, last time we had the session, the last two sessions, basically everybody was super bulled up on gold. And this is another one like Euro. We were long from last December into the ramp higher. And then we said, you know, you have to entertain the possibility that we need to come back down, possibly into the 600s, 1500, 1600, right? And basically that was because of this aggressive failure here at these highs. And we'll have to see what's happening here. I mean, is it stretched? Sure. You know, and I actually traded gold to the long side this week, right? I'm flat now, but I traded to the long side. It's really stretched here into, you know, 3 standard deviation move. But it better catch a bid pronto, right? Because if not, this is that whole 50 back zone. And especially if it can't hold the 1700 from a day close basis, you could see a lot of late longs that are hanging on for dear life, or a lot of people trying to pick it up here. Flushed. And again, this is likely going to be, you know, in line with bonds here, where you're seeing bonds are starting to stabilize here. So if bonds catch a bid here into the end of the day, gold's probably set a low in for the day. Equities are probably going to ramp up for the day. NASDAQ is going to tractor beam, try to ramp back into that 13,000. So you really want to look at the action on the bonds. But you also saw the way they were moving today. The overnight session is just, it just doesn't smell right. It smells like an accident waiting to happen. So, you know, we'll have to wait and see. But again, very interesting dynamics across the board. And I think this month's been plenty of opportunity, left, right, and center. Sure. Plenty of opportunity, both to the long side and the downs. And yeah, you can look at it right here, right now. You've got basically what's happening. Bonds are catching a little bit of a bid. Equities are catching a bid. So gold up, silver up, USD JPY down, euro up, cable up, Swissy up, Kiwi up, a Swissy down. It's the same trade across the board. So you have to understand and you have to take advantage when everything's starting to move in sync, because it means you can be very efficient, not only with your trade management, but also you can be extremely efficient with picking the best way to express your trade or the best risk rewards, right? Yeah, do you have a specific question on silver? I mean, silver here is very, very choppy, right? In a very, very choppy zone. I mean, it'll likely trade pretty much in line with everything else. I don't have a particular, to me, it's not cheap enough to buy and it's not expensive enough to sell here. From a bigger, longer term perspective, it's like copper. So the view would be bullish, but from a much longer term perspective. But here, for me to do anything, it need to be much higher for me to look for opportunities to sell it, or much lower for me to look for opportunities to buy it. So unless you're trying to put on some kind of spread trade against something else by itself, I don't find it particularly interesting here. But, you know, we'll be tracking gold to a certain extent. Yeah, sorry, not particularly useful, I guess. But any comments, any questions, anything anybody's looking at, anything anybody wants to discuss? We'll keep it going as long as people have questions. Yeah, I mean, here another one that's kind of it's been trading stubborn, but as long as it's, you know, when crude trades stubborn, this is probably going to be easier. Let's look at when it trades stubborn. It's stubborn. You don't want to get in its way, right? And it's kind of stuck here at this key level. I think this is an interesting place to look for shorts, especially once you got this reversal on the daily. It's just not getting any traction, right? So would it make sense to look for some kind of reversal? Sure, but yesterday, you know, if you see the action yesterday at a certain point, it really looked like it was going to break down right into these lows, and you know, they're just bids coming in. So when you keep on getting this kind of action, it's just very hard for it to sell off. So do I think it will be healthy to see a little bit of correction? Sure, but it's hard to fight it here. I've got a small short on crude here, but very, very tiny position. But again, unless something crazy happens, you'd expect the dips to be fairly shallow, right? Yeah, here you're seeing as bonds stabilize, what's happening is, you know, stocks are stabilizing too, and you've got yen back below the 109, Swissy back below the 93 level. It's all moving in sync, right? It's all moving in sync. It's fairly orderly, right, across the board. I don't think you have to look at anything in particular. You just want to make sure here we're looking at the bigger picture simply because people are asking for a general view. But in general, when you're trading, I would stick to the time frame you're trading. That's the most important thing to understand. Yeah, a lot of people ask me about that. Um, Today we're talking about it, Euro JPY. I'm not a huge fan of trading the crosses because they all tend to get caught in the crossfire. But I mean, we are at an interesting inflection point on a shorter term level. And if you look at it, basically, it's this action around on EJ, right? So back through these previous highs. So today it looked like it was starting to turn and it wanted to get back above these highs. And when you get this kind of pattern, this kind of situation, it's fairly interesting to me, right? Because you see how we've kind of gone straight up, however you want to draw your trend line, but straight up. And then you get a double failure here. You tend to get a good, quick bang for your buck or a nice asymmetric play as late longs get stopped out. If it can attract new buyers at highs, longs taking profit and some tactical shorts coming in, you tend to get a quick move back down into these consolidation zones, maybe all the way back down into the 127. But here for this to really get, hey Mango, how's it going? For you to get traction on this, you'd really want this to close back below this 129. So you can call it the 130. You'd want to close it back below the 130 on the day. That would be ideal for this. But again, I think here when the action is so clear and everything is moving in sync, and in general, I'd always rather express views through the majors, through the most liquid pairs. But sure. Yeah, it's similar. 0.93 for Swissy, 109 for USD JPY, 130 for Euro Yen, 120 for Euro USD, 13,000 on the NASDAQ. Those all-time highs on the ES. We're at a 1,700 on gold. We're at fairly key pivotal levels across the board. And at these levels, it's interesting to want to play or look for opportunities to play because you can likely get into decent trades with very tight stop, with very nice asymmetry on the trade if they get going. But equally, what's really important when you're trading at these pivotal zones is not to come into it with a bias, right? Because by definition, we break out of these Momo lines, somebody's going to be wrong. And usually if people get trapped, then the move can really be sustained. You could really grind aggressively. So it's really important not to have a crazy or dogmatic view. Be open to what price tells you, right? Focus on price. That should be your guide. No bias. Don't marry any position. Don't fall in love with any position. Your focus should just be in trying to make the best possible trades you can if anything sets up. That's important. Okay. Any comments, any questions? What's going on with Russell? I mean, Russell's just going, cocaine angel, right? I mean, forget about that. Most of the companies are bankrupt or whatever. You've got stuff like GameStop, Plug, all these names up double digits every day. The Russell's going to do what the Russell's going to do. When it ends, it'll correct just as spectacularly as it's been ramping. But as long as it's going, it's really, to me, it makes no sense to chase it at highs, but equally it makes no sense to try and be stubborn on the short side. That's not where the edge is. They're far easier battles to pick. Yeah, we're talking about that. Next week you have to be on your best behavior, right? And focus. Next week's going to be a pivotal week for a lot of reasons, right? Yeah, hey, how's it going? Yeah, I'll update all that stuff in the Sunday video. Yeah. Um, because you've got so many, the market is just hungry for what the Fed is going to do, right? And next week we've got that FOMC. Interestingly enough, we've also got the BOJ that's been talking about yields, and on top of that, as we said, this is all coming in line with March expiry, which is the busiest expiration cycle with December. And then once that is done, we're going into the end of the quarter, right? That's another thing you have to keep in mind. So basically, we're going to have to deal with rebalancing flows, month-end flows. Going to be a lot of interesting things going on. And especially the way bonds are trading, and especially if this extends versus stocks, etc., there's going to be a lot of rebalancing to be done, not only in terms of, bonds versus stocks, also inside factors, etc. There's going to be a lot of stuff that needs to be done. And by the way, remember the action we saw into the close on quarter end flows in December, right? And some estimations it could be even larger in March. So you really have to be on your best behavior here the next 2 weeks. This is the next 2 weeks are really make or break, easy make or break your quarter, maybe even your year, depending on how these trades, but extremely important, extremely important. Yeah, and you have to understand where you are, not only in terms of location on the chart, but in terms of seasonals, in terms of OPEX flows, in terms of month-end flows, et cetera, because there's so many underlying currents going on, you can really get caught off guard. And if you don't understand what's going on, it's never a bad idea to put your foot off the accelerator or just watch, right? Watch and learn, try and pick up what's going on, ask people questions, because this is when it's not only purely technical. Well, the levels will always be technical, but you could get a lot more velocity of moves and the ranges could really expand, that's all. You really have to be careful. Okay, how long have we been going? 33 minutes. Comments, questions, anything anybody's looking at, anything anybody wants to discuss, any trade anybody's managing, any chart we haven't looked at that anybody wants me to look at? Okay. Okay, good stuff, guys. Nice hanging with you for half an hour or so. Wishing everybody awesome rest of the day, an even better weekend again. Yeah, we did gold. It'll be on the recording. I'll post the recording on YouTube. And again, have a great weekend, and thanks for stopping by. All the best. Talk to you guys soon. Take care. Bye-bye, guys.